guys, KenFX Freak here with a Monday Money Madness. We are back. We are bringing these episodes back to you, going over all the key themes that we're seeing in the markets, anything sexy that's coming out or juicy that's likely to move and shift the markets this week. So keep an eye on this every Monday. It'll be up on the YouTube channel, which you're watching now, Freak Network. Let's jump straight into this. Guys, what I want to go through in terms of this episode, let's talk about a few things. I want to go through last week, okay? And I'm going to show you my screen here, my screen there in a moment. I want to speak about how we're battling between two themes, just so you can see it, really clearly what we're observing in terms of the risk appetite and then the safe haven flows, those two different themes there and what's driving those. And what we're likely to see moving forward. I did touch upon it actually with Joel. We touched upon a few things in our podcast, in our podcast that went up yesterday. And then I've also got noted down here, I want to go through, just talk about the dollars movements. I want to talk about this week, one of the key things that we're looking out for actually is the RBA, the Central Bank of Australia. Got their rate decision, okay, which will be good. Expecting some decent volatility there. And I just want to touch upon actually as well, before I do the RBA, I'm talking about the stock indices. US 30 on a rise still at the moment, boosted last week as well, and I'll come on to that. All right, so first thing I want to talk to you about is these themes, okay? These two themes. All right, so this is quite good. I do like using this from time to time. The only reason I'm not a massive fan of Bloomberg is just because every time you go on a website, they're trying to make you subscribe, which is annoying, a lot of paywall stuff. But anyway, how the world's purchasing managers see current business conditions. So this is our first theme that we're going to talk about. PMIs. PMIs are such a closely looked at figure, right? The PMIs for manufacturing, okay? The performance of manufacturers in the respective country. Services, whether they're a service-led industry, it doesn't matter. Services will be contributing to a country's GDP. And then, of course, the composite as well. So here we've got this is one of the themes that I was talking about this one, the first one, promoting risk appetite, risk on markets. What does Ken mean when he's always talking about risk appetite, risk on? Guys, I'm talking markets hungry for riskier assets. They don't care about safe havens. If we look at safe haven effects, we're talking about dollar, we're talking about yen, we're talking about Swiss francs. We don't need those, get out. We're hungry for risk. Riskier FX, AUD, NZD, CAD, GBP. GBP is always seen as a riskier currency. It doesn't deal well in times of crisis. It's one of the worst hit. Literally took a beating from when the COVID-19 situation happened in March. So, look, global PMI activity. Look, so you can see deteriorating to green, improving. Let's see how we've been doing since economies are getting back up and going. So look, you can see obviously March. Look at these periods. Obviously, I'm looking at Egypt here, but let's go down. United States. Okay, look at March, April, May. It's awful. But we're starting to pick up. You can see now more neutral there in June. Let's look at another major economy. Same thing for the United Kingdom. Red, literally bloodshed. The worst of the worst. Deterioration. These were, contracting heavily. And now you can see, look, improvements. Same with Eurozone, a little bit more slower. Some of the key nations, Germany still lagging a little bit, but improving. France, Italy, you get the point, right? You can see some of these improvements. China, really bouncing back. At the end of the day, they're a massive manufacturing hub. And you got to think, guys, at the end of the day, I don't know about you, but me, I've been pretty much active anyway through lockdown, still trading and working away. But I can imagine a lot of workers, when they're getting back to work, they're going to be like, yes, let's go hard. Let's go harder than an MF, right? They're going to be going times 10, times 100 with the energy. They want the output. They want big output because everyone would have been cooped up inside. They want to do a good job now. So you'd expect these huge rebounds. And I think just a message to everyone is down to us now to really, really cushion the blow as much as possible with these contractions. Obviously, you can see that in the key data there. But just in general, these key lags that we've seen in the economy, that we all make this collective effort together, produce good service. If you're in a service-led business, whatever the case may be. So this is one of the themes that markets have been focusing on, the risk appetite. And this is really supportive, as I say, of the riskier FX, AUD, NZD, CAD. GBP, Euro, everything outside of dollar basically. In this time, since March, while we've been seeing all this bloodshed of data, the dollar was well and truly supported, right? Let's just quickly go into the dollar actually before I go into the next thing, the Dixie here on a daily. Actually, I've got this on a weekly. Now, you can see all in March, you see all this pumping, while this data was very bad in March, you know, the March period there, you can see. You know, Dixie was very well supported. Why? Because it's the number one currency of the world. It's the reserve currency. Everyone uses dollars to do business. So that's where people sought some safety. So obviously all in that period. And then we're consolidating. A lot of this consolidation was largely due to economies getting back going again. So markets just like trying to put out the feelers. Are we going to see a bounce back? Are we going to see good data? And obviously here you can see back end of May, all that's risk appetite comes into play. Dumping dollar, dump. Also not helped by the FOMC pumping money into the markets. So yeah, that's going through. Always keep an eye on this. I do. It's really good. The global PMI activity to see how everything's performing. What do I want to go into next? So that's the risk appetite theme. Okay, the markets were battling between. That's why we've seen a bit of consolidation, or we had seen some consolidation last week. And then they're trying to fight this. And I don't even want to dwell on this. I don't want to talk too much about this because, you know, I feel like this is the annoying thing for me. You know, like when all this is going on, the COVID-19, and we're seeing the rising cases, awareness is key. Don't get me wrong, awareness is so key. And if you've ever been affected by it or your family members, you know, my heart goes out to you. But it's just when the press continue to dwell on it massively and they know what they're doing, and it just creates a sense of negativity. And you've got to think, everything is driven, in my view, sorry, they're going on a different thing here, but everything is driven energy. The energy that you put out will come back, right? It goes around, comes around, so on and so forth. And I think that if you're panicking, you're making people worry, right? And people like to worry. As humans, it's unfortunately in our nature that we worry. You know, you keep pushing that out, press, you morons, then of course it's not going to be helping the situation. Anyway, so this is the theme that about what I'm talking about, safe haven flows, the theme of caution in the markets, cases rising globally, okay, really rising globally. And let's take a look here. Obviously the daily cases still been rising there. I just want to show you where we're really picking up is the United States. Can you see that? US and Brazil. And this is what the World Health Organization were talking about, okay? When they're saying, yes, it's great that we've seen Europe, and we're covering this in our rundown to our members today, and it's like, before our technical rundown, it's like, look, Europe's improving, really improving, given that it was a hot spot. You know, the Eurozone bloc as a whole, Italy, Spain, France, Germany were all battered by the rising numbers, but big improvements there for Europe. But still trying to deal with this theme now of rising cases globally, USA, Brazil, India. These numbers are not good. They're not good. But, so those are the two themes. So one, improving data points. Two, the other theme, the safe haven one, about the risk, the rising cases of COVID-19. So those are the two themes. And look, if you check back to my rundown, guys, yeah, I said how the markets are focusing on this. Okay, not my rundown, excuse me, my video, the podcast from the weekend. The markets are focusing on this. Improving data, okay? Getting better. Remember, look at all of this before, all that green, it's great. The markets were in a great place, you know? So I believe, of this period of consolidation, getting these breakouts this week, really expecting to see some dollar underperformance. Let's talk about RBA quickly. The Reserve Bank of Australia. So this is the rate decision this week, right? What are we expecting from the central bank? No change in monetary policy. Let's bring up monetary policy. No change expected from them. You know, remember they did take action response to COVID-19, like a lot of major central banks did. They lowered the cash rate 0.25%, so lowering borrowing costs. So, you know, for consumers, this is great. You're lowering your costs on your mortgages. You're lowering your costs on any outstanding balances of credit cards, whatever. You know, you're paying less interest, so free up some more cash for people. So they did that. They also targeted their 3-year government bond yield of around 0.25%. What do they mean by this? They're just trying to keep borrowing costs low for everyone. They don't want those like spiking aggressively higher, in this very uncertain time. They want to keep borrowing costs low, mortgage rates, etc. down, balances on your loans. They still want people to be encouraged to borrow, okay? Banks to lend, people to spend, stimulate the economy. Anyway, so what are we expecting with this decision? Guys, Australia and its cousins over in New Zealand, and this is why I like AUD and NZD. These two economies were the best, one of the top two anyway. One of the top two? One of the couple of best nations anyway that were dealing with the containment of COVID-19 and then getting the economy back up and going again. So I believe, with that being said, what does that mean for AUD, Ken? Get to the point. They're going to be optimistic. There's room for them to be optimistic, the central bank, which will be supportive of AUD. And remember, Governor Lowe, surprisingly, this fella here, let me get him up so you know who he looks like. Governor Lowe. Look at this fella. Hey, there he is. Whoa, he's concerned. Very concerned young man. Well, not quite young, but concerned man. So anyway, this guy the other day, we'll say it's some point last week. Some point last week, he was just saying that the recent rise in AUD, and that's thanks to the risk appetite that we've seen in the markets, markets hungrier for risk, given the improving data points, is not a concern for them. Now, typically, they have been known historically to talk down the Australian dollar, but they didn't do that on that occasion. So, with that being said, I think there's still room for AUD to pump up at this rate decision with their optimistic tone, because data's been improving as well. Just so you're aware, let me see if I can see it on here. Australia. Central banks have things that they look at, okay, targets. One of their main focuses is employment. They want improving employment, labour market. The other one's inflation. So these are the two things that you should always look at in terms of data when we're going to see some big moves for AUD. We're looking at the jobs data, labour market data, and we are looking at inflation. Okay, so let's see what they say as well regarding those two, whether they see those as creeping up. If they see higher inflation, if they see a bettering labour market, it's great for AUD. It's great for AUD. Talking about AUD, let's just bring it up here. I won't show you, because otherwise I'll just undermine the analysis I put out for the Freak Network guys. But look on a weekly here. Look at this. This is interesting. Okay. Bit of a pennant structure there. There or thereabouts. See that? Here's all your pole. Consolidation over the past 1, 2, 3, 4, 5 weeks. That's subject to a nice breakout to the upside, that, so it seems. So yeah, keep an eye on AUD this week with the RBA rate decision. I was just going to touch upon stocks as quickly. US 30, I know some people trade that. I do from time to time when I see nice opportunities. And you can see the way in which we've recovered from this stock market crash. We can call it a crash. We've recovered nicely, really well here, and expecting that to continue to push higher. You look, last week we had the NFP data. NFP was good. Look, broke out of this sort of flag structure, descending channel structure, making waves some further upside, just clearing this range. You can see there's a range here in which we're sort of breaking out of. Just if I just put that there, you can see nice little range breakout, subject to test these highs here at the in June. So guys, I think that's pretty much it. It's got a lot of things that we've been talking about there, conscious of time. But guys, look, hope you enjoyed that Monday Money Madness. We're back with it every week. We are back. Look, guys, for daily fundamental and technical analysis, please do not hesitate to check out freaknetwork.io, which we put out analysis, trade ideas, fundamental, technical to the members every day, Monday through to Friday, and on Sunday of our weekend preparation. Guys, we've also got a course. We teach all of this technically, fundamentally. Check them out, courses rather. And we've recently just launched some AI solution as well. Please do not hesitate to check that out. I'm sure you will not be disappointed. Stay lit, and please, guys, we want to grow. We want to grow for the purposes of putting out value, which we do every single day if you follow me via social media. So please, 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 it means a lot if you could subscribe, turn on the notifications as well, because you will see the amount of content we're going to be pushing out soon with the guests that we get in here as well. Some exclusive chats with people within the industry, and I'm sure you're going to find it very interesting. Stay lit, baby. Yeah, let's get it.